Hi guys, I hope all of you are doing well. This is your Nifty Guy. Welcome to another episode of Decoding Nifty with me, where we analyze Nifty on multiple time frames and trying to find out the best possible trade setups for the next trading session. So if you guys like the way I analyze Nifty, please like the video, subscribe to the channel, share it with your trading friends or trading communities that you might be a part of. And as well as please do comment anything that you might have to say to me, be it feedback, be it criticism, or any question that you might have. I am open to everything. So on that note, let's start with what we had planned yesterday for Nifty versus how it played out in the markets today, and how did we handle the entire trading session today, right? And then we'll jump on to the second part of the video, which would cover the plan for the second day. Now, what I would like to tell you guys is to please watch this video completely because I am going to discuss about structure changes and how you can be uh, prepared to spot these structure changes early on so that you can take benefit of it in the coming many sessions that are there, right? So yesterday, what I had told you guys was that we will plan a long entry above this high with a pullback, and a short was planned only below this particular zone, which was there from where the breakout had come out, right? I had also very clearly mentioned that I am expecting some major volatility here. So to keep the quantities very, very low and to be very, very strict with your SLs, also while taking it, also while trailing it, right? So Nifty opened with a gap up. The gap up did not sustain, immediately forming a big red candle at the very, very start. Now, in one of my previous videos as well, I had mentioned that in case the first 5 minutes trading range is a big range, expect the markets to mostly be in that range for that particular day, right? So this is what we can say, except for this particular zone, the market was entirely inside this 5 minutes zone, which was there. Uh, but our trade setup was to create or take a long entry above this particular high because the pullback has already come in. We were supposed to take a long entry above this, and this was also the open equals to high, wherein people who would have shorted around these levels would get trapped once this particular high goes out. So the only trade that I took today was around this level when this high got taken out. I got somewhere out around this particular candle was forming. It was almost a cost to cost trade because of the falling VIX. There was not much momentum in the option prices today. So anyone who would have seen and or observed the option prices for both calls and puts, there was a very sluggish movement in the option prices. I would like to term it as that, and that is exactly what had happened. And I took a cost to cost exit. Now, the second thing which I had observed was a trend line which was forming like this, plus around here, Nifty was just simply taking multiple supports. So kind of a triangle pattern which was forming, and prices around here had consolidated a lot. If you just put Bollinger Bands, you will see the Bollinger Bands are squeezed by a lot, right? That shows consolidation in the markets. And markets did break down below this, but as I told, right now I am not looking at taking any short trades below this particular level for today. For tomorrow, we'll discuss the plan once again. And you would see as soon as this low was taken out, it gave a good bearish candle, gave a closing below this zone, immediately got reversed. So, and again, it came down here, right? So, anyone who would have taken a short around here, immediately his stop loss would have been triggered. Anyone who would not have trailed his stop loss very tightly once this breakout was would have happened would have got his stop loss triggered very quickly, right? So that was the reason why I asked you guys to be careful, reduce your quantities, as well as be very, very strict with your stop losses and your trailing stop losses, right? Now for tomorrow, I'll just delete this. We don't need this. For tomorrow, first let us look at the daily time frame, right? What we have here is a doji candle, all right? Now comes the very important part of understanding the market structure. I just for the time being, I'll switch it to a line bar. I'll delete all the drawings, right? Line bars would not do because so I'll delete all the drawings around here. Just follow the cursor, okay? So from around here, the top that market made, if you can see, market was constantly making lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower high. This was almost an equal high, right? Not a higher high. You can call it a higher high, but still kind of a lower high. And I still believe that in case if this big gap down would not have happened in the Indian markets based on the tariff news of Mr. Donald Trump, this low would have been protected and the structure change would have come in. But now what it is. So market has a lower low. Still here, the structure was still bearish, but market has now given us a higher high. Now all we need is a higher low for the structure to change and for us to be cautiously bullish in the coming trading sessions, right? And as I was also telling you guys that this is the parabolic move, which kind of scares me because such parabolic moves do not sustain. So now what is left to be seen is that if this is a change, the first step of change in the market structure, or this is just a trap for bulls, right? To grab their liquidity, wherein people would be all bullish that, yeah, we have formed a new high and will go long. And then market takes their liquidity and immediately goes back down below into the structure, right? So all these scenarios are possible. Everything is possible. As I always tell you guys, be prepared for anything. Don't predict anything, right? So we're not predicting that, yeah, the short-term bottom has formed or uh, now we are into the bullish territory, right? So nothing of that sort what we'll do. We'll be prepared for anything. So now, say for example, this is a short-term bottom, and we are on the way to change the structure into a higher lows and higher highs, right? So till what level should the market come and we will be still be comfortable? Uh, Let us again say, for example, this is the high around here which market has formed. So we'll take the Fibonacci tool, right? And we'll just adjust this particular box. So this was earlier used for us to see the levels above which we can predict the market to be much more than a retracement and break the structure. So this is the level. Markets can safely come down to around these levels, and that will be a healthy retracement for me. Nothing to worry about. Once market starts to trade below this level, that is something again I will be a little more cautious. So till the time these levels are safe, I am 100% more cautious, and till the time we are above this particular level, we are on the bullish side of the market only. Now, if we are to plan the trade for tomorrow, uh, tomorrow is expiry minus 1 day. Again, my sincere and humble request to all of you who are into option buying. The VIX is obviously in the negative for the last couple of days. Even today, it was around 2% negative. So that will give you some price crash in the option prices. So in case you are into option buying like me and you are trading tomorrow Nifty, please switch to the next week's expiry, which is the 30th of April. Yeah, 30th of April. So 1st of May is a holiday. So Wednesday is the expiry, 30th of April, which would be the expiry. And you please switch over to the options of that particular expiry so that you don't get trapped because of the volatility and you are on the safe side and don't lose out much to theta decay. All right. So for tomorrow, again, we'll keep the plan of action extremely simple. Let us mark this particular swing high around here. We'll, we'll plan a long entry above this swing with a pullback. For a short entry, I will wait for the today's low to be taken out, right? And in case of today's low being taken out and market goes down, we can the first and the bare minimum target we can keep is around these levels. Market can come back to retest this level again, breakout happens and retest also happens. So these are what we can target in case. So a lot would also depend on the opening. In case market opens, see, market also can go sideways for a couple of days around here if it has to. If the markets are super bullish, based on the data that is in front of us, based on the FII's continuous buying in the cash market for the last couple of days. Today's data is yet to be here, and we'll see what it is. So, in case if the market is into a super bullish mode and that will not retrace much. It can go sideways for some time, form a base again, and then again continue the upward journey. That would still be fine with us. But Again, like I always say, be prepared for anything. Don't predict anything. In case the market opens somewhere around here, somewhere around the closing, uh, then it would be a little volatile. We'll need the markets to move on either side for us to give us a trending move, right? So again, on the daily time frame, like I said, the open-ended divergence, which I showed you guys yesterday, is still there. It has not been broken today. Market has made a new high, but the RSI on the daily charts has not crossed that particular high. So the open-ended divergence is still there. It can break any which ways if the market still decides to go up in this parabolic move. It moves up further ahead from here and this goes up, the divergence would be gone. But right now, yes, it is definitely there. It's called an open-ended divergence, which we should be cautious about, and we'll just take a factor of it in to our trades, and that is something that I have already planned in. So even if we are looking at some short trades, we should be ready for it. We should not be hesitant to take those short trades looking at the move over the last couple of days which has been there. So that's it from me for today. I will see you guys again tomorrow. Once again, like, subscribe, comment. I would highly appreciate it. I'll see you guys again tomorrow. Cheers. Have a good day. Thank you so much, guys.